We now move on to our special segment, the results of the PwC MAP CEO Survey 2021. This is a survey that asked the country's CEOs to share their views on how the Philippine economy can cope with the challenges the global pandemic has brought and how they plan to adapt their businesses into the new normal. Here to present the survey results is the Managing Partner for Deals and Corporate Finance of Isla Lipana & Company, PwC Philippines, Ms. Mary Jade Roxas-Divinagracia.
Hello, everyone. 18 months after the first lockdown, our CEOs and business leaders are more confident of the growth prospects, not just of their own businesses, but of the industries where they operate as well. Almost 3/4 of the CEO respondents are confident that their businesses will experience growth in the next 12 months and even more so in the next 3 years. And while some sectors like technology and financial services may be a bit more confident than others, there is no one sector that is overwhelmingly positive or negative about their prospects. Now, what does this tell us? While the pandemic certainly has far-reaching impact, how each enterprise responded made a huge difference on how well they are performing now and how they will continue to adapt to the changes in a COVID or post-COVID environment. What is driving this optimism? What is fueling this confidence? A year ago, we were not clear when the vaccine will be available. We have very little information about the virus and how to fight it. In the face of significant uncertainty, CEOs took a more conservative view and prepared for the worst. Now, thanks to the innovation and the collaboration of business and the regulators, we have seen several vaccines make it to the market in record time. These vaccines are giving us hope that the pandemic can be managed. And while COVID-19 cannot be fully eradicated for now, at least we are comforted that we can live with the virus as long as we get vaccinated and we continue to practice the safety protocols. We conducted this survey between July and August of this year. And even when another ECQ was declared, particularly in the NCR, this did not dampen the confidence of our business leaders. Some of the initiatives that businesses did to thrive during these challenging times include quickly adjusting their operations, bringing their businesses online, accelerating their digitization initiatives, and introducing new products or services, and even undertaking new business models. However, risks and uncertainties remain. The pandemic caused and continue to cause damage to our economy and most people's livelihood. And certainly the Delta, the Mu, and many more variants will continue to pose risks to our health, to our businesses, and to our society at large. So while the availability of vaccine is keeping us hopeful, 2/3 of our CEO respondents think that the rollout of vaccines in the country can be improved. The slow vaccine rollout is one of the primary reasons that can derail our economy's recovery. They have also cited political uncertainty as a top concern. And given the elections next year, our CEOs are anxious as to what changes in the political personalities and the policies will next year's election bring. They have also expressed concerns that the continuing reliance on lockdowns will further impede our nation's economic recovery. In fact, about 70% of our CEOs said that for every ECQ, MECQ, or even GCQ that is in effect, they lose at least 10% of their sales, and there's a corresponding impact on their bottom line. Several business groups, including the MEP, have called on the government to identify other countermeasures to control the spread of COVID, aside from simply declaring lockdowns. Retailers have called upon the government to expedite the vaccine rollout, allow private sector to purchase vaccines for their employees, allow fully vaccinated customers in their retail premises on certain days, and generally just asking the government to open the economy. Despite these challenges, more than half of our CEOs also believe that we will see more than 4% of GDP growth rate next year, and that the economic recovery will happen between 2 to 3 years. Our CEOs identified major growth drivers for the economy, and consistent with the responses in previous years, these are infrastructure development, domestic consumption, and government spending. Not surprising, given the experience of our hospitals and healthcare workers in responding to COVID cases. Since the pandemic broke out, our CEOs have ranked healthcare as should be the top priority of the government. Infrastructure has been consistently identified as a priority even pre-pandemic, and certainly, while infrastructure has been at the center of both the Aquino and the Duterte administrations, still a lot needs to be done. We need to have good infrastructure in place to enhance our competitiveness and attract more investments into the country. However, for the first time in the CEO survey, education figured in the top 3. CEOs have expressed concerns that the 2 years of online learning will have long-term repercussions on productivity and the economy. In fact, the ADB has estimated that students from the Philippines are at risk of lower earnings of up to $155 a year as a result of less effective online learning. This will further exacerbate the income disparity between different segments of the population. It is apparent, though, that business leaders have come to realize that a number of the changes we've seen during the pandemic will be here to stay, and the ways of the past may no longer be sufficient to navigate the future. So how are businesses responding and preparing for a different, but hopefully a better post-pandemic reality? Our businesses investing for the future. CEOs are definitely rising up to the challenge. More than 74% of the CEOs plan to increase their investment on digital transformation. The pandemic has forced businesses to accelerate their digitization plans, and technology has rescued us from going back into the dark ages. CEOs will continue to invest on technology and on what many would call responsible digitization. As businesses have moved online, CEOs are also looking to increase investment in cyber resilience. The threats of cyber attack and breach of data privacy laws have never been greater, and the CEOs are strengthening their defenses against such threats. Of course, technology will not properly run without upskilling the people who will use it. However, the push towards digitization will only favor highly trained people. Opportunities will be fewer for those who cannot adjust and who are not able to adapt to the new technological tools. A staggering 84% of our CEOs are planning to increase their investment in leadership and talent development. As important technology is during the pandemic, human creativity and tenacity is even more critical, and our CEOs know that. We've heard earlier about the Edelman Trust Index. An overwhelming number of respondents in that survey believe that it is the responsibility of businesses to retrain and upskill workers whose jobs are threatened by automation. The goal of most business leaders is not to go back to how business was done pre-pandemic, but to build something better. On that note, more than two-thirds of the CEOs are also looking to increase their spending on sustainability and ESG initiatives. And in the last 18 months, we have had fascinating conversations with our clients about sustainability. And while these conversations were primarily centered on the environment and climate change, it is encouraging to see that businesses are going in the right direction. The pandemic may seem like the most urgent thing that we need to address at the moment, but climate change will be a much bigger challenge, particularly so for the Philippines, which is ranked in the top 3 to be the most affected by climate change. And COVID-19 has given us the opportunity to pause and think about our priorities. Hopefully, it has given the environment its much needed break as well. However, when we drill down on the environmental initiatives of various businesses, only a few CEOs said that they track their carbon emission and making a deliberate effort in reducing their carbon footprint. Most of the businesses, as shown in the survey, still have limited climate change initiatives, and these are mostly focused in the area of reducing paper, energy, and water consumption. And only 36% of the CEOs said that they measure and report the financial impact of their sustainability practices. This is also limited to mostly large corporations and those which are publicly listed. Only a few MSMEs have responded on the positive. Also, only 43% have included climate change and environmental damage into their strategic risk management activities. As more regulations are put in place, we will see more businesses incorporating ESG and climate considerations into their corporate strategy. On social initiatives, businesses have focused on providing healthcare assistance and medical benefits to their employees. Some have already adjusted their compensation structure to incorporate remote working or flexible working arrangements. Businesses have also revisited their governance policies, including tax compliance. However, there is still a long way to go for businesses to incorporate ESG in management KPIs. ESG is far too important, and it needs to be driven from the top. There is a need to take this out from the corporate social responsibility initiatives and be incorporated in the overall corporate strategy. As we see customer behavior and expectations evolve, there will be a demand for change. Ethical consumerism is on the rise, and customers will vote with their wallets. Customers will choose to support companies and brands that they believe are aligned with their values. Investors will demand that their investee companies are ESG compliant, while employees will be attracted to work for companies that they can be proud of. So, companies are expected not just to respond to the needs of their shareholders, but to the wider network of shareholders. The past year and a half have been no less traumatic for most businesses, but what COVID-19 has given us is the realization that if we work together, not only do we have the capacity for change, but we have the incredible ability to drive change. And judging from the responses of the CEOs from this year's survey, we can clearly see the resilience of the Filipino spirit, and we remain encouraged and hopeful for what's to come. For more information about the survey results, please visit our website. Thank you.